Hello everyone. Today is Thursday, April the 2nd, 2015. My name is Michael from Global FX Club and this is the daily moving average video. Just before going forward, please do pause the recording and read over our risk disclaimer. Alright, so let's jump right into the swing of things. We are starting off a new month, a new quarter, and new trades. All right, we are in a long euro kiwi thus far. Look at that tongue twister. But we are in a long euro kiwi thus far. I'll zoom in for you. I'll make this for members when you sign in. I'll make this so that is clickable in the near term. But as of now, you could just zoom in, zoom out. If you don't know, that is Control plus, Control minus. Okay. But we got long off of this breakout and now a sort of back test, okay? So that's the play. Stops are at 143, a little bit wider than normal due to the fact that Euro Kiwi tends to move pretty rapidly. So 100 pip stop on the Euro Kiwi and relative terms will be sort of like a 55 pip stop on Aussie dollar, for example. Same thing with Kiwi dollar. All right, so that's the only open trade. Please feel free to go back and watch the previous videos. Also, the trade setups here, some technical pieces that we have written up, as well as the fundamental analysis and also the stock analysis. Okay. Going to keep on doing more and more, providing more and more content to you guys. And also feel free to again just jump in the chat room. Just you could leave it open and just see any updates. We post the trade setups, any new articles, levels that we're seeing, videos, etc. Okay, so do please take full advantage of that members area. All right, so let's jump right into the moving average charts. Okay. First, we're gonna look at the Euro Kiwi. Okay, if it wants to open for me, let's do this. It's gonna minimize it a little bit. Okay, so you guys can see chart time frames, etc. Okay, so here's a Euro Kiwi. Now, what we have here thus far from a moving average standpoint is that we have that prices have broken above this resistance area, both the 50 period SMA as well as the 100 period SMA. Okay, next up is the 200 period SMA, which is pretty far, lying at that 146.70 area. And so long as we stay above both these moving averages thus far, upside is preferred. We also have a breakout, and I was looking around and doing my own analysis, and you could kind of almost call this a head and shoulders play as well. Okay, and I'll draw that out for you. Here's your head, here's your left shoulder, and there is your right shoulder. Okay, now how you typically analyze this is from you'll measure the neckline, and then from the breakout you'll get the same period. So that's about 300 pips. So then you're looking at 147, which is again right there next to the 200 period SMA. We'll see how this plays out. Whether it's a head and shoulders play or not, I like basically the fact that we have some bullish momentum divergence on the RSI. We have a breakout, and we have slipped above both the 50 and the 100 period SMA. So that, even if this wasn't a head and shoulders play, I do like those areas. But nonetheless, if you have noticed it or were thinking if that was indeed, it seems to be one of the popular price action formations of the head and shoulders. Okay. But in this video, wanted to place some focus on some of the commodities. Okay, some of the commodities being, let's take away the drawings. Here we have crude oil. Okay, crude oil and we recently actually tweeted this out as well. Crude oil has made a nice spike to the top side, and it largely came off of the fact that there were some talks about Iran and the West inching towards a deal, so that provided some spark in crude oil. Okay. Nonetheless, though, we have prices really breaking above all three key moving average from my standpoint that I like to use. And also, we have a nice moving average crossover, the 50 crossing above the 100. The last time we seen a crossover of the 50 and the 100 was back in the middle of February, and we could see some nice real follow through there, right? From the crossover time period around 51, we reached a low about 42, and this is really the first time we've seen that crossover since there of the 50 and the 100. On the other hand, the 50 and the 200, okay, that's the depth cross if it's to the downside, and to the top side would be the golden cross. And we are inching towards that golden cross, which will eye for higher levels in the commodity being crude oil futures. Okay. That said, if we open up the time frame though, let's keep the 4 hour here on this chart and open up the daily on another time frame. I like to look at things from different time frames and perspectives. Okay, we see that it has crossed back above the 50-day moving average. All right, let's go ahead and let's pull it back on the 100-day moving average. Okay, it's the day moving average because we are looking at it from a daily time frame now. Okay, make this thick. All right, so pretty far away from the 100-day. Last time we had any significant crossover, that was back about July of 2014. So keep your eye on that 100-day moving average, and then nice topside breakout here. So crude oil, it could see some further gains. Next up is about that 55 area. 55 is also that big psychological resistance. But in my opinion, as long as we stay above this inflection point here of 47 flat, then do not rule out further upside, at least until that 55 marker, which is again that next topside key resistance. And that 55 area is just that recent low, but more importantly would take away from this breakout feature that we like thus far. Gold, okay, gold below both key moving averages. We are having a negative slope in the 50-day moving average. Okay, so still bearish thus far. All right, we would like to see prices really get back above that 50-day moving average, which will coincide with the 100-day, and then really put some upward bound pressure on gold. But until then, I would like to be sidelined with this pair particular. I think crude oil is more attractive in terms of a commodity trade. Gold, would like to see further developments, but bias on gold going forward still to the downside as we stay below both these key moving averages. All right, so again, please do send us an email if you want any specific pair, commodity, indice, or stock covered, and we'll be happy to analyze that. All right, and if you're not a member, feel free to sign up for our 14-day free trial, and we look forward to hearing from you guys soon. Send us an email to info@globalfxclub.com, or shoot us a Skype over to Global FX Club, and we'll be happy to answer any and all questions. Cheers, everyone, and good luck trading.